Well, today is a horrible day if you are a saver, if you keep your money in a bank hoping to get a return on your money, including in CDs. Today is a bad day if you are employed in a 9-to-5 job, earning typical hourly wages, clocking in, clocking out, working for the man, so to speak, and not creating your own self-sufficiency. And today is probably a bad day if you're a retiree as well, if you're on a fixed income, if you rely on Social Security, right? In fact, today may be, maybe in hindsight, we look back and say it was the beginning of the end, right? And everyone's gonna say, well, what are you talking about, Matt? You're a doom and gloomer. This is all just negativity. Things are great. The stock market, the Dow Jones hit an all-time high today, up almost 850 points. The S&P was up. NASDAQ gained 1.8%, up almost 400 points, right? Gold put on $35 an ounce. Silver put on 80 cents an ounce. Bitcoin was up 4,000 or 5,000. So you're going to say, hey, what are you talking about? Well, I'm going to explain what I'm talking about, okay? And then I'm going to explain what I think the impact's going to be for many people. And I'm going to then provide at the end, from my perspective, not financial advice, legal advice, some potential solutions to this disaster. So again, what am I talking about? I'm going to share one story with you today, a very short article. And before I jump into it, if you would do me a favor and subscribe to this channel, we are growing. I appreciate you guys. If you're not subscribed, please hit the subscribe button so you get notified when I drop new content as well. So today, Jerome Powell was over at Jackson Hole and gave his little speech at Jackson Hole, widely anticipated, right? And what the markets were hoping for, and they got it, was basically Powell coming out and giving dovish comments relative to what they plan to do at the September, Fed meeting, right? And markets got what they wanted. So out of zero hedge today, bonds and bullion bid as Fed Chair Powell delivers dovish remarks from Jackson Hole. This is kind of a bit of a pivot from where Powell has been coming from recently. It says, Powell surprised many with a notably dovish tilt. Powell said situation suggests downside risks to employment are rising, and shifting balance of risks may warrant adjusting policy, meaning drop rates. Says Powell recognizes, and this is the kicker, it's always this dual mandate between controlling inflation and having a strong jobs market, right? So here's what he talks about, and basically admits that the job market has been destroyed. Okay, we've shared that on many videos over the past months about how the job market in this country is in terrible shape. So as Powell recognizes the employment picture is significantly worse. And a couple of his comments today is this slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially, but it does not appear that the slowdown in job growth has opened up a large margin of slack in the economy. He also says labor market has softened in line with demand sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant, right? So it's of course now more to the downside, okay? So now they're going to have to, panic, shift to try to save a failing job market at the expense of, and I'll share this with you, inflation, right? So it says this unusual situation, he says, suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of higher layoffs and rising unemployment. Leave your thoughts below. Who believes that layoffs are not rising, unemployment is not going in the wrong direction? So those are the comments from Powell. He says the shifting balance of risks may warrant adjusting our policy stance. And of course, rate cut odds spiked. September odds, I believe, are now at 90% for a rate cut. But also, odds in October are over 50%. And in December, they're up at 80% for further rate cuts. So we may get several rate cuts this year. Okay, so of course that sent stocks rocking up higher, gold and silver rocking higher, cryptocurrencies rocking higher. But let me explain what the impact is from my perspective, and I welcome your thoughts and comments, because obviously market participants will see this as huge opportunity, right? Because lower rates will decrease borrowing costs. It'll increase further speculation and further people taking additional risk. And it's going to save, right? Potentially the markets and all the other asset classes. But really, what's going to happen from my perspective is the impact is the dollar will continue to decline. Purchasing power of the dollar will continue to evaporate. The Fed admitted now that the job market has collapsed. So what is and that's not only going to decline domestically, but in terms of its, let's say, a credibility on the world stage. The dollar index today fell almost 1% from what I saw. This will also, guys, increase more inflation from my perspective. Costs of things will keep going up. Okay, when you basically put more money, create more money out of thin air, you're going to create inflation. Okay, and it's also, like I said, going to encourage more risk, not only for market participants, right? More margin, more debt, but it's all and a bigger blow off top, right? But it's also for consumers going to pose a further risk. The consumers are going to see this as a great opportunity to go out and take out more credit cards, finance more vacations and more toys and things they shouldn't be financing. I've already seen articles out this morning on CNBC saying, wow, with these rate cuts coming, it's going to be a great time soon to refinance once this trickles down to the mortgage rates. But what's going to happen here? From my perspective, this is going to result in further destruction of the lower middle class. It's going to result in a further widening of the gap between the rich and poor, the haves and have-nots, between Wall Street and Main Street. And this is what always happens, right? The wealthy love lower rate environment. But again, if you're saving in dollars, you're in bad shape. If you're working for somebody else, do you think for a second that your wages are going to keep pace with? They're already not keeping pace with the inflation rate, right, and the cost of living. And this is supposedly in an environment where the Fed's been fighting inflation, right? So what do you think is going to happen as inflation continues to go higher, as they're now trying to save a struggling, jobs market? Okay. So what are some solutions? I don't want to go too long today. From my perspective, again, not financial advice, legal advice, all that stuff, but real assets like gold, silver are going to continue to go up in value from my perspective. Is it going to go up in a straight line? Of course not. Cryptocurrencies, and I'm talking about Bitcoin, Ethereum, and XRP. Those large ones they're going to outperform. And for those of you that haven't yet got your mind around the fact that digital assets can have value, then I don't know what to tell you. If you're not looking into it, you're going to miss the boat. What else can be done here, guys, is become self-sufficient. For almost 2 years now, I've been coming out on this channel saying start your own business, start your own side hustle, create your own stream of income so you're not dependent on somebody else, but also more importantly, so you can hope. So you have a fighting chance of earning more money than is being eaten up with the cost of living and rising inflation. And from, again, my perspective, you will not be able to do that if you're working a 9-to-5 job making basic hourly wages. So consider becoming self-sufficient, starting your own business, okay? What else do you do? Get debt paid off. Pay off that debt. Do whatever you can, to get the debt paid off, and try not to take on, any new debt that you truly cannot afford, to be carrying. All right, now, will this stimulate the housing market? I discussed this briefly the other day on the show. If this does translate into lower mortgage rates, lower rates for refining, it might provide a spark to the housing market. We'll have to see how that plays out. But on balance, this is not a good day for, for middle and lower class. It just, I say class, I don't like that word, but, income earners. It's bad. Okay, you're going to hear now on all the main street media how this is great. It's an awesome day. Everybody made money. Look, my assets went up, but I hold assets. People that are in the stock market, they made money today. They hold assets. But many people, I wouldn't say most, a vast percentage of people that are struggling in this country are not in the stock market, folks. They're not buying gold at $34 an ounce. They're not, stacking up on silver. They're not buying cryptocurrencies. They're not buying land. They're not doing those kind of things. They don't have the expendable income to do that. From my perspective, this is going to only dig the hole deeper for those people, unfortunately. So again, I'm sure I'll get some doom and some comments that I'm always being negative. It's positive news for those that don't have a lot of debt, that have their finances under control, that have real assets. Okay, it's negative for those that don't, and it's probably going to get worse. So thanks for allowing me to go on a little bit longer than normal today. If you like the content, if you enjoy the content, please give me a like on the video, and please subscribe to the channel. As always, I welcome your thoughts and comments. That being said, we're still here in Kauai for about another week. Got a bunch of excursions planned. So I'll keep posting some photos and stuff up on my my pictures page. You guys can get some views of what I'm doing here. But look, it's going to be spun as a positive thing, right? These corporations want to borrow more money at lower costs, right? The federal government has to service its debt at a lower, interest on its, $37 trillion debt. They love doing that at lower cost. People that hold bonds, right, are going to, their bonds are going to perform better in a lower rate environment, okay? So is it all negative? Not for the people that have assets, not for the wealthy, okay? But for everybody else, it's a disaster. All right, with that being said, I'll talk to you soon. Bye.